going to be aware of what the market is doing at that point in time. They're going to do their due diligence, even if they want to get an appraisal on the house. The appraisal comes back for what you're turning around and selling.
The Abundant Wallet.
All right. Well, again, Stephanie, thanks for your time. I appreciate you jumping on, and welcome to the Abundant Wallet podcast. How you doing today?
I'm doing great. How are you?
Doing good. Thanks. I was kind of looking at some of your experience, and we like to kind of share the good, the bad, the ugly with the community for aspiring investors, or maybe experienced investors who may have not thought of a strategy that they've come across. So glad to talk to you. So yeah, let me, if you want to kind of give maybe like a quick background, like maybe how, like what you do today, how you got started in real estate, because we've all heard about it, and some of us who are glutton for punishment just either dive right in or tiptoe in or whatnot. But how'd you kind of get started?
It's been an interesting journey, that's for sure. I've always known that real estate was kind of the way to go, just because I'm really looking for that passive. As we all know, real estate is not 100% passive, but it's as passive as we can really get, right? And so I've always been trying to break into it. I didn't actually get into it until 2022. But I knew years before that I wanted to. Unfortunately, up until that point, I didn't have the capital to be able to get into it. Because in my mind, you had to do the traditional, I need to get a conventional loan, I need 20% down. But the truth is, that's not the case. I actually got into it by just talking to people, letting them know what I'm doing. I wanted to get a house that needed to be fixed up. My personal niche is I really love those rent-to-owns, and because I'm helping individuals who they may not have the credit, but they are ready to buy a house. And so the house that I got into, the girl needed to get out of the house. She was done making the payments, so I essentially took over the payments. I got a renter. I had no money down. And the renter has been there ever since. They had a large deposit, and so if they turn around and they tear up the house and they're gone within 3 to 5 years, I got a decent sized deposit, and I'm making a little bit of cash flow on that property every month. But the loan remained in the original owner's name for a short period of time. It is a risk. I'm just going to say, we all know what the due on sale clause is. It is absolutely a risk. But and then I go through and I'm refinancing the property out of the original owner's name. So that's how I jumped into it.
That's awesome. Is that what they call sub to, or is that totally different? Like subject to, like if the renter, like rent to own is where you're renting. Eventually down the road, you are going to go and buy the house from the landlord. But if for whatever reason it doesn't work out, I thought you can like put the name in where it's like subject to. There's a clause in the contract. I may be wrong on that, but it sounds like sub to.
Yeah, I gotta be honest with you. I actually have other people handle all the paperwork stuff. I just I'm like, hey, here's the deal, make it happen.
Okay.
So I have a fantastic network of individuals that help me out with that. But with this particular one, we utilize it's a state of Kansas, and so every state is a little bit different. But we went through the title company, and essentially I'm not able to sell the house without first offering it to this individual. And so they're protected, I'm protected to a certain extent. And it's been a fantastic deal. I love those rent-to-owns, and I'm absolutely looking for more. Those are my long-term strategy for sure.
Yeah, that sounds really good. As far as, it sounds like you have a team when you look to acquire, or maybe they do some of the findings. They found something on some of the software and maybe they bring it to you, or maybe it's the opposite.
Yeah, no, it's more of, if I find the deal, then I will call the certain individuals within my network. Hey, can you help me out with this? I have some go-to people that I've just made have a great relationship with, because I dove straight in. I like to say that I jumped off the cliff without a parachute when it came to real estate, just because it's a rough ride. But along the way, I did meet some amazing individuals. I have one person in particular who she just makes or breaks my deals. I turn to her for absolutely everything, whether it's a quick conversation or a sanity check. So she's been wonderful. So having that network is absolutely everything.
That's good. That's someone you definitely want in your corner to kind of kick the tires and be like, the numbers look good, but have you thought about this? So that's incredible. Yeah, that's great. So when you first started in 2022, it sounds like you're doing rent to own, and that's kind of like the strategy you're using. So I'm guessing you're doing. Are you doing residential and kind of in the Kansas market, or?
For right now, yes. We have had our share of flips. I will not do a flip again unless it just is a slam dunk, just makes sense. Flips for me are very stressful. Just because you can purchase a house and you can stay on budget, you can stay in the timeline. You purchase it, say, I don't know, the 1st of February in 2020, and then you go to sell it, March of 2020, and the market could be completely different within that time frame. So it either you could be on budget and do well, you could completely lose everything, or you could come out just extremely above where you anticipated. And I prefer to I'm an accountant with my education, and so okay. I like to kind of spread out that risk. I do have a high tolerance for risk, but flips are just a little bit too much for me. I'll let the other people handle those.
Yeah, that's funny. I've done all multifamily buy and holds, and then I don't know what it was, for whatever reason. Maybe I was just itching to get something, and that's where you kind of steer wrong when you jump into something. So I am doing my first flip, and I really regret it, because I don't care what comps are shown if the time if the time of the comps have kind of gone up and down, and it's a gamble. So I'm definitely going to stick to buy and holds for sure.
Yes. I love the house hacking. I love that people do that. If I was in a different stage in life, maybe a single individual, I would absolutely house hack. But yeah, buy and holds are kind of the sweet spot. I will say commercial, great margins on that, but a lot more red tape, a lot more hoops to jump through.
Yeah. So as far as like maybe one of your early wins, what kind of made you realize that there's money to be made, or this is something that you can do?
I think it was just for quite a few years. Really starting in my 20s, I started realizing, started thinking about, what do I want to do long term? What do I want to do with my life, kind of thing. And I don't want to have to trade time for money. That is not the goal, because, you have individuals from the 2008 crisis of their entire 401k was completely wiped out. It was devastating. And people say, well, it bounces back. It does bounce back. However, what about those individuals that were getting ready to retire or just retired? They don't have that time. They don't have the luxury of time. And I think that affected me tremendously, to the point that I don't want to experience that when I get older and closer to retirement age. And so real estate, don't get me wrong, it's not kind. It can be extremely difficult, but at the end of the day, everybody needs that place to live. Housing is never going to go away. It doesn't matter what inflation does. It doesn't matter, what the world market is doing, whether there's a war, there will always be housing. And so because it is so steady, it just makes sense to try to have somebody else pay down your equity. You get that house paid off. You can either turn around and take that money, buy another house, or you can turn around and just have regular income. One thing I love about real estate is that if you do have the equity in a property, you turn around, you take that money back, that's a loan. you don't pay that money back. Your renter does. You don't pay taxes on that money. So that's what a lot of people just don't realize, is that you can turn around and say, hey, I'm going to take $40,000 out of this house. I'm going to buy another house. That's a loan that, once again, that's not money out of your pocket. So
yeah, that's tax deferred, right? It's there's no capital gains because it's not income. You're borrowing it because you're going to rinse and repeat and put it into another property.
Exactly. Yeah.
That's great. Cool. So anything specific that comes to mind of maybe one of your earlier rent to owns that, maybe it's a cash flow play or equity play, or like I there's so many advantages to real estate. Like I bought this property with 20% down, and just something as easy as, wow, my tenant is awesome. He's paying my my mortgage for me, and I'm just sitting back and collecting, or something of that nature.
Yeah, there's definitely a lot of perks. There's a lot of downfalls as well. You can have a horrendous renter. But at the end of the day, once again, rent to own, they put a large deposit down up front. That's non-refundable. So even if they're only there for a year, they put, let's say, $5,000, $10,000, whatever the case may be, you've got that in your pocket to cover the damage or to go towards the damage that they may have done to that house. But the wins really come down to just the ability that they're building your equity. That's the part that I love the most. And also being able to help those individuals that couldn't get a house any other way. I think that's probably one of the most rewarding parts of it, is they have the money, they just don't have the credit. So you're there to help them out.
Yeah. So they're kind of going behind the door, or going to a private lender. You're not looking at big banks just because maybe your credit score is a little bit lower or whatnot. Yeah, that sounds pretty lucrative, actually. That's great. What about maybe some of your, sure, we all have them, maybe your toughest lessons or setback that you can remember, that even though it may have been a setback, but it still was like par for the course, and it's just like, I'm still not quitting. It's just something that was still a plus, where even though you went through this challenge, you still wanted to continue.
Yeah, we haven't completed a lot of flips. We've only completed 5 total. And
okay.
That was a learning lesson. I kind of blacked out in that time frame because it was very stressful. Trying to meet that timeline, trying to meet dealing with contractors. And I'm sure, Larry, you're dealing with the flip right now. You know what it's like dealing with contractors. Number one, they're never on time. When they say it's going to be done, chances of that happening are very slim. And so just trying to keep that timeline is really, really tough. But I'm incredibly thankful to have had that experience, just because even though it wasn't the most fun I've had in my life, it taught me what I don't want. So when I look for my rental properties now, I either look for a turnkey, or I look for one that, yes, it does need some repairs, but I can find a tenant that it wants to do the repairs themselves. They want to remodel the house themselves. Great, you can do that at your cost. I'm fine with that. Which what I did with the last property. So you get it at a lower cost, and you don't have to put in the money to get it repaired, which is fantastic.
I never thought of that. Yeah, like typically you'll have a renovation budget or a slush fund to repair. If that gets put on the tenant, that sounds fantastic. It is, but I will say you do have to be very careful with the tenant laws, because if you are technically the landlord, then it is technically your responsibility in most states. I'm not sure about all, but it is technically your responsibility to do some of those major repairs. HVAC goes out, anything like that. Typically, that's going to be on you. However, my tenants take care of everything. They have that home ownership feeling, and that is their house. I don't have any contact with them whatsoever, other than collecting a check once a month, which is, I'll take that. That's ideal. Yeah, that's cool. I'll definitely have to maybe do a deeper dive or pick your brain if I wanted to set up one of my properties for a rent to own, because It sounds like there's a lot of advantages, even though, you could have the best tenant. I mean, we all have a past, so maybe we don't have the best credit, or, there was something that, wasn't totally 100% legit. But I feel like if you have the rapport with that particular tenant, then that can go a long way.
Yeah, absolutely.
Awesome. As far as like your current investment strategy, what does that currently look like today?
It really hasn't changed much.
Okay.
Today, honestly, right now, I'm focusing on, we have a lot of development on the personal side, so we've kind of put a hold on investing any further at this time. But it's for a short period. If you do get to that point that you're like, hey, I'm not looking to buy anything for at least 6 months to a year, possibly 2 years, make sure you stay up to date with the market, because it can change. That means that you have a realtor that's sending you regular listings so that you understand when you are ready to jump in, you understand what that house should be worth, and that way you're not overpaying. Or if you see a great deal, you're able to jump on it right away. But you're not going to know that unless you're looking at the housing market. Honestly, at least once a week, twice a week, whatever the case may be. I definitely have a realtor that she sends me regular updates for the house that I could potentially buy. But even though I'm not ready, I'm still checking them out, looking at the quality of those houses. What are the finishes? How many bedrooms? What's the price? That kind of thing. So that once again, when I'm ready, it's going to be just walking right into it, and it's going to be super easy.
Yeah, that's good. I feel like due diligence is pretty key, and you want to make sure you have everything before you put an offer, and just make sure you got all your ducks in a row. Yeah.
Yep.
Yeah, that's good. On a rent to own, like, what is usually the duration? I mean, is as long as they want to rent, you're making money, or is there? I mean, it sounds like there's a sale opportunity where you can you can cash in on as well.
Yeah, there's a couple different ways that you can structure it. I typically do a 30-year amortization. And so essentially, I'm like their bank for the next 30 years. But the truth be told, about 80% of the individuals don't end up buying. They're usually there from about 5 to 7 years, and then they turn around and they go someplace else. And then it's a rinse and repeat. So you have the same house. Let's say you got $5,000 down the first time, you're going to get another $5,000 down again, and you're going to turn around and get a new renter in there that'll be there for another 5 to 7 years. So sometimes they end up buying. If they do, that's fantastic. But I don't put a balloon in my contracts, just because, truth be told, they're in this position. They're probably not going to get to a point anytime soon that they are ready for that. So it's going to be a renegotiation at that point.
Okay.
So I'm fine just doing a 30-year amortization.
Yeah. Yeah, that's good. And if you have a tenant that does the 5 to 7, do you typically, whether you fix up the house or not, do you typically raise the rent, or it just kind of depends on the market?
I do, because we have the sale price at, let's say somebody moved in 7 years ago. Well, the housing market is different. So if I have a house that, I know it's completely different all over the country, but I'm in the Midwest, so it's a little bit lower. So if I have a house that is $200,000 7 years ago, and then I go to look at the market now, and that house is now worth $275,000, same house, no changes except for time, I'm going to turn around and I'm going to resell the house for $275,000. So essentially, the monthly payments do go up. My liability does not go up. I just increase my cash flow for that time frame.
Okay, that sounds awesome. Now, I guess a couple things can happen when you do that. The tenant could be upset because the market is doing really great, and that's good for you, and their rent's going to go up, maybe way up. Do they typically, like, what happens?
Well, it's not the same tenant. It's assuming that the first tenant leaves, if they're gone after the 5 to 7 year mark, and then you have a new tenant in, then they're not going to know the difference, and they're going to expect that higher rate because they're going to be aware of what the market is doing at that point in time. They're going to do their due diligence. Even if they want to get an appraisal on the house, the appraisal comes back for what you're turning around and selling it for. The fact that you made any kind of a profit off of that doesn't really matter, because you're selling it at a fair value.
Okay, so it's at a certain point when, maybe the tenant's ready to leave that you start doing your market research. It's not you do your market research while they're in there because, typically if you have a good tenant, you don't want to up the rent for fear that they might leave.
I don't up the rent at all on the tenant that, if it's the same tenant there for 30 years, they're going to pay the same price just like a regular mortgage. Yeah.
Gotcha.
Because my liability doesn't change unless I turn around and take money out. But if that's the case, then I may have to cover any excess because their payments don't go up, with the exception of taxes and insurance. That's the only reason their payments would go up, just as, a regular mortgage.
Okay. And they understand that. Every year that the tax bill comes out, if it comes up, they understand taxes go up and there's a slight increase in that.
Yeah. Okay. Yep. It's just like we pay escrow. So
there you go. Okay, got it. I'm learning. Great. Let's see. So how do you typically fund your deals? So I know, as also for me as a W-2 employee, I use that cash or any of my side business stuff that, where I can put that in, then I'm going to do it. But I'm just thinking of deploying your capital across deals. Do you prefer using your own capital? Do you leverage? Do you do a mix?
Yeah, that's an interesting question. So a couple of ways. It kind of depends on the deal. If you've got just a standard buy and hold, and usually something like that's going to be conventional, unless you happen to know the current owner and you could get a situation like I have with my prior rental, so where you can just literally take over the payments. Very, very risky. Keep that in mind. That is extremely risky because the bank could come back and do a due on sale clause or evoke that and say, hey, the full amount is due right now. But the truth is that if the bank is getting money, they're probably not going to do that as long as they're getting their regular payments. But other than that, if it's just a standard rental, then we're probably looking at traditional financing. If you have one that might need a little bit of work, then I do have certain individuals that I'll reach out to for private money loans. Those are extremely expensive. Those are like hard money loans, private individuals that are willing to loan, which are great, but you have to turn around and you have to refi out or you have to actually finance it within a certain time frame so that you can pay them back. So if you just needed just a little bit to get the deal going, or you needed to do it with cash, then these individuals are usually great for that. But yeah, usually a traditional, creative, or looking at private money.
Okay. Yeah. And sometimes private money is maybe the same or even worse than a hard money lender, just a lot less documentation, right? So
yeah, it kind of depends. I have worked with some fantastic private money individuals, and then I've had, they make a lot of money off of me sometimes. So, but at the end of the day, if I'm in the green, then I'm good. Or in the
okay.
black.
Yeah. Gotcha. No, that's good to know. Have you ever looked at ways to kind of recycle or reuse your capital more efficiently between deals? Some people who are in corporate America, they may use, their 401k or their IRA. Some people who don't have that, that they may have just money sitting in a checking or savings account that's earning nothing. Or is there another financial vehicle that you know of or that you've heard that people use to kind of reuse that? So you're kind of like we mentioned before, you're borrowing. It's really privatizing your private bank function, and then borrowing from yourself to put money into another property. But at the same time, the logistics of it, you're still able to gain dividends on that borrowed capital. Have you heard anything like that?
Absolutely. When it comes to 401k, self-directed IRAs, things like that, you're able to utilize your retirement today and be able to capitalize on the funds today as opposed to waiting until you're a certain age to be able to withdraw it, so which is great. But with 401k, always remember you do have to pay that money back within a certain time frame, and there's usually a cap as to how much you can borrow. So a lot of people go, oh, I have $20,000 sitting right here. Well, you can take that full $20,000 out. They typically have a limit of how much you can borrow, and you have to make sure it's paid back within a certain time frame. But the thing is that with the 401k, if you turn around and you pull the cash out and you're going to do, say, the buy and hold, you can use the rent payments to pay that back for whatever time frame, assuming that it covers, your 401k payment along with the mortgage. That would be great, but honestly, most of the buy and holds don't have a substantial cash flow.
Yeah.
That's great if you can find one that does. But usually it's just a couple $100 a month. What you're really gaining is somebody else is paying down your equity, and then you have the asset at the end. So
yeah, that's the standard. So something that I have learned maybe 3 years ago is something called infinite banking, and I don't know if you've heard of it or not, but basically you have you're privatizing your banking function. So meaning, let's just say you have a bunch of capital in something that's earning, even the high yield now is like 3.2%. But I have learned that I can put a bunch of my capital into what's called a dividend paying whole life insurance policy, kind of like what the Rockefellers did and a lot of the other real estate gurus do. And you can actually earn a little bit more, maybe 5 to 8% on that. The cool thing, unlike a 401k, you don't have a limit. The sky's the limit because it's your capital. It's privatized. It's not governed by any, governing body. And, there's no limit as to when you pay that back because it's just collateral off the death benefit. Have you heard of anything like that? Or have you used something?
I haven't.
Okay.
I haven't used it, but I have heard of it. It's been a while, so I'd have to kind of look at the details again. But yes, that definitely sounds along the lines of what I've read about. So I have not used it myself, but it's a great way to go. I mean, your heirs may not enjoy it, but I mean, they get the property. Does that count?
Well, yeah, and that's another component of it is the legacy component. So, I have 2 grown kids. I'd rather hand down income producing assets than cash that they may or may not squander. So, I mean, totally. So, depending on how you look at it, you take some from your death benefit, you put it into an asset. Essentially, you're hoping for an arbitrage, so you're going to be making more money than you put into it. And then, God forbid something happens to you, that is passed on to your heirs. So, but yeah. So, that's kind of, I'm an infinite banking practitioner, just a follower of Nelson Nash, becoming your own bank. But yeah, we can talk later on that if you're open to it. Would love to do a deep dive and see if you're open to that. But if not,
I definitely would.
Sure.
So something that I'm working on is I have an educational platform that I'm putting together, and it's for, I have a personal tier and a business tier, and one of the modules in there is about investing in real estate. And so I didn't even think about it, but that would be a great component to add to that real estate module. So I love that. Thank you. I'd completely forgotten about that.
No, I'm always looking for smart ways to do things, smarter ways. And, I'm a late starter. I don't have 40 years to play the stock market or do mutual funds. I need to do what the 1% and the 2% are doing and optimize and have systems in place. That's really interesting. That sounds like an educational platform or a course. What I don't know. What services do you provide with that? Or is it, obviously it's an educational platform. Is it a course, or is it a book, or is it a program?
No, it's a subscription-based program, and we have a personal tier and then a business tier. And essentially what it is in the personal tier, there's anything from, side hustles to how do I even do a budget? What is a budget? The fact is most people are not taught anything about finances growing up. And so they learn by fire when they go out on their own. And so this is kind of people have different ways of pulling things together. And so the platform really is to help very basic things, like I said, budgeting for an individual, side hustles if they just need to make some extra income, all the way through investing, wealth building, that kind of thing. And then, of course, you've got the business tier specifically for entrepreneurs and small businesses. And that teaches them, as an accountant, I've been an accountant for well over 25 years. And
Nice.
I've worked with a lot of startups, lots of millionaires. I see how they move their money. I've watched them, I've helped them. And so the goal for me is to help those small businesses do what they actually need to do and not what your stereotypical accountant will tell you to do, because let's be honest, accountants are usually a pain. They're usually the stoppage in your process. You can't do that, this is why. And they don't always understand the operations in the real world. And when you're talking about a small business, sometimes you're flying by the seat of your pants. And so my goal is to help them know what they absolutely need to know to make sure that they're able to succeed and not fail before they're able to truly get started. So
Yeah, I love that. That's great. Just a nice way of not just giving back, but helping the next generation and, paying it forward to, hey, here's something you may know or you may not know. So for us, lifelong learners out there, even if it's the smallest thing that we may not know, we want to know about it. So I think that's awesome.
Yep, absolutely. And we haven't started building it just yet because it's been in the planning phase for about a year now. So by the way, Larry, I'm looking for my Founder 50, which is the first 50 individuals to come and help me build the organization. They're actually going to be getting bonuses, affiliate links, and all that good stuff throughout the life of the company. So it's only going to be the first 50 because after that, but the goal is for them to help me get the content that everybody really wants and not what I think they need. It's a market research, and so they're helping to build it.
Yeah, I that sounds awesome. I'd love to be part of that. Definitely want to promote that to make sure both your and my audience is aware of that. That sounds really good. So, in kind of with that same vein, what do you think most investors misunderstand about money or financing? Do you think?
That's a good question. I think new investors tend to underestimate the importance of really looking at the numbers and really understanding the risk that could be involved. New investors, they just kind of jump in and you've got all these acronyms flying around. You got PITI, PMI, whatever. And I think for new investors, it's just really important to understand, number one, the lingo, and to figure out what niche they want to be in and become a master at that, and not try to do every single strategy. The more you grow, if you want to expand on your strategies, great, but get really, really good at one before you decide to branch out. Otherwise you're jack of all trades, master of none, right?
Yeah.
So.
No, I really like that. Yeah, if you're going to make it a business, make sure you have the mentality of doing a business instead of, how some non-investors might do with houses. And, they just have a lot of emotion. So, the rest of us is like, if the numbers don't work, what's the next opportunity where the numbers will?
Yep.
But I also like your statement where it's not really stay in your lane. It's just get enough experience in a lane, and then maybe you can make a pivot, but you want to come with some type of experience with you that kind of builds on each other. So I like the whole, instead of going wide and doing every little thing, you can't be everything to everybody. It's kind of nice to go deep first and, in one lane, then just go to your next lane and do the same thing. Just keep doing that until you have enough experience. Yeah, I love that.
Yeah, you have to think about where you're at in your journey, and just because you've got the guy next to you who's able to do something completely different doesn't mean that it's going to work for you. For instance, I'm starting out in real estate. What I really want to be doing is commercial real estate when it comes to storage rentals,
yes.
Parking lots, things like that. That's where I want to get to eventually. But like I said, additional capital, you've got a lot more red tape, higher competition. So I'm not quite ready for that next step, but I'm going to be really, really good at at this segment of the residential market. And so I'm going to know it like the back of my hand. I know what I don't want. I don't want flips, but I really love the rent to owns on the residential side. So
yeah, no, I think that's good. I think you can take what you learned and transition that into the other asset class. I for one love a lot of those asset classes. I love parking garages. I love storage units. I love car washes. You know, I probably can't take my current knowledge that I have now and just run with it and just hope for the best. Like I need some kind of training or some type of module that I can, you know, do a deep dive on before I even begin to think about those, because even though they're lucrative, you know, you don't want to treat it like a flip or treat it like something else that you may not have enough experience to do the right due diligence on.
Right. You mentioned car wash, and my first thought is, the thing is with the car wash, that's an everyday service business, right? And so that's going to be treated very differently than a storage unit, because how much do you actually have to check in on a storage unit if you have a computer letting people in and out and monitors and things like that? You know, you might have to physically visit the property very, very little, if at all.
Yeah.
So it's kind of two very different things there. So yeah.
And, you know, something maybe people that are just doing investing in properties, residential or commercial, like it's, you know, there's a business component of it. So, you know, it's not just one stream of income. You can have many, and you just want to make sure those are going well and not taking away from you. So, good point.
Yeah. Larry, you have to have many streams of income. You have to. If you don't have, even if you have a W-2, make sure you have other streams of income, because what happens if that W-2 goes away? You know, people don't have pensions anymore. That's not a thing. People aren't at the same company for 40 years anymore. And even if you are, they could turn around and say, we've got somebody younger and less expensive that we're going to replace you with. And so, yes, it's a different age.
It is, yeah. You have to protect yourself. You have to have, you know, that emergency fund, you know, just in case. Yeah, it's a good point. So don't put all your eggs in one basket. You have to, you know, see what's out there, see what you're good at, and capitalize on it. Yeah, awesome. Let's see. I know we're just about at time, but I guess out of curiosity, what do you think the biggest challenge you're facing right now when it comes to either capital or scaling your business?
That's an easy one. The biggest challenge really is it's capital. Like I said, we've got a lot going on the personal side, and so we don't have additional funds to be pushing into a business at this point in time. You know, I have a lot of contacts when it comes to VCs and whatnot, but they typically are more for, honestly, a lot of them want to get involved with SaaS programs and things like that.
Yeah.
Not a lot of them want real estate, but yeah, it really comes down to capital. I think that's probably the toughest part. And once you figure that piece out, I think everything else is just so much easier. So if you don't have the capital, get creative. There is a way. There is a way to do it. No matter what, there's a way.
Yeah. That's great. It sounds like you're an outside the box thinker, and you know, don't take anything off the table. Let's see what we can come up with. So yeah.
Yep, I love those crazy ideas. Those are the best.
Awesome. That's awesome. Well, again, Stephanie, I really appreciate the time and the insights that you put into to the podcast, and really, you know, thanks so much for being on.
Thank you so much for having me. This is awesome. It's been a while since I've been able to talk to somebody about real estate. So
no, this is good. You know, it doesn't matter if you've done one deal or 100 deals. I feel like there's always something to learn. You know, we're not where we were, and we're not where we're going yet, but you know, work in progress, and we'll all get there. So yeah.
Very true.